In this video, I'm going to teach you 5 ways to build up your credit score to a 750 or higher. But first, to establish some credibility, if we look here, this is my FICO score. It's a 790, last updated on May 26th. Then if we look at my Credit Karma, I have an 817 with TransUnion, 794 with Equifax. We scroll down, I'll show you some more of my personal information, 100% payment history. I'm sharing all this info with you not to show off, but to show you that I know what I'm talking about when it comes to building credit score. So the first step is to check your credit report. You could check your credit report completely free. You don't have to pay any fees. If you go to annualcreditreport.com, it's important to look in there, make sure that everything is correct, see if you are an authorized user on anyone's card, or if any information doesn't match up, you just call up and you get that corrected right away. Next step is to pay off as much credit card debt as possible. So if we look here, there are 5 factors that determine your credit score. The most 2 important ones is payment history, which accounts for 35%, and then amount owed, which accounts for 30%. So if you miss any credit card payments, or if you have a high utilization, which means that let's say you have $10,000 in credit card limit that the banks are giving you over many different credit cards, and you have $3,000 in debt, that's a 30% utilization. If you have 5,000 or 50% utilization, your score is going to go down dramatically. Ideally, you want to get that number below 30%, or ideally 0% utilization. Therefore, you're paying off your credit cards in full every single month. By the way, I'm David, and if you want to learn wise money tips to build a wealthy future, hit the like button and subscribe to the channel. Second step is to monitor your credit on a regular basis. So as I showed you, creditkarma.com, free website. I have no affiliation with them at all. I've been using it for years. It may not be the most accurate, meaning that the numbers may be a little more inflated than FICO, but it's very convenient to find your information and all the basic information you need, very user-friendly. Next step would be to open a credit card. I know it seems ironic if you want to pay off your credit cards. Why would you open up a credit card? For whatever reason, credit cards actually help boost your credit score for a few different reasons. The credit limit, the credit line that the bank gives you on the credit card, that will help your overall credit score. The higher credit limit you have across multiple credit cards will mean that the lower your credit utilization will get, as I gave you that example before. If you don't have any credit cards, or if your credit score is poor and don't think you'll be eligible for any credit cards, you could get a secured card. So I really like the Discover It secured credit card as a starter, especially if you want to get into cash back and points and start using that. But you have to have good habits and pay off your credit card bills in full every single month, ideally using auto pay. So every credit card you have, you just go in, you click auto pay, and every single time that your credit card bill is due, it automatically pays for it from your bank account that you have linked to it. Now, if you're wondering about fraud, if you might not catch it, well, it's important to check your account at least 1 time per month just to make sure that there is no fraud. Now, the main difference between a secured credit card and an unsecured credit card is the unsecured credit cards are probably the ones you've seen a lot, like with Chase commercials, Amex commercials. Those are unsecured credit cards, meaning that the bank may give you $5,000, $10,000, $20,000 in credit line that they're expecting you to pay back. With an unsecured card, the bank may not trust you yet, therefore you're going to have to use your own money. So you may have to give a $200 deposit, which is refundable with a secured card, and you will get that $200 back, but you make purchases on the secured card, and every month it'll report to the 3 credit bureaus, which is TransUnion, Equifax, and Experian. If you've established a good relationship with the bank and with your secured credit card, you're making on-time payments, you're using it, and you're paying it all in full back, then the bank may see that you are a worthy customer, you're more trustworthy, and then they'll extend you more money and possibly offer you an unsecured credit card. So you could go from the Discover It secured credit card to the Discover It credit card, which means that you now have an unsecured card and that your credit limit is going to help you boost your credit score, assuming that you pay everything in full every single month and you don't carry a balance. Next step would be to become an authorized user on someone else's credit card. Now this part, listen carefully, this is a really important part. You don't want to mess this up. Whatever card you become an authorized user on, you're going to absorb the payment history and credit limit of that card. If there are late payments or any other negative items on this person's credit card, then you do not want to become an authorized user on their card. Basically, you want to piggyback off of someone else's good credit history and good credit habits. If they have a high credit limit and a long credit history, this will dramatically increase your credit score. I've seen people get a credit score boost of up to 80 points by becoming an authorized user with the right person. So you just want to make sure that this person is trustworthy. Before you become an authorized user on them, make sure that there's no late payments or anything negative with that account or even this person. And you could also tell this person that you want to become an authorized user on their account to help boost your credit score, and that you don't need to touch the credit card at all. They could receive the credit card, cut it up, and you never have access to it, so they don't have to worry. Next step would be to get a higher credit line. So there's a couple of ways you could do this. You can apply for more credit cards. The only issue with applying for more credit cards is that you get a hard pull or a credit inquiry on your report. These hard pulls could be anywhere from 2 to 5 points per credit card that you open. With Capital One, they actually open from, or they pull from all 3 credit bureaus. So it could be 2 to 5 points times 3. Now it really depends on which credit card you open. Having too many hard inquiries on your credit report may not look good to future banks if you're trying to open up credit cards, because they may see you as a risk. So there really is a strategy and a way to do it, which I won't get into in this video. But the good thing is that those 2 to 5 points that you lost, you will gain after 12 months. And then after 24 months, the hard inquiry will be removed from your credit report. Another way to increase your credit limit is to ask the credit card company for a credit limit increase. This is probably the easiest way to do it. This way it doesn't incur a hard inquiry or hard pull. It doesn't affect your credit score, and you could get up to a 20 to 30% credit increase, and this credit increase will help your credit score. Besides having a great credit score, it's really important to learn how to save money as well. So in this video right over here, I talk about the 6 best ways to save up to $1,000 per month. Click that video now, and I'll see you in that next video.